Okay, so if you had to pick just one word to sum up the Brazilian economy over the last 3 years, that word would have to be contradiction. Seriously. We've seen some solid growth, but also soaring debt. We've watched landmark reforms, things that were stuck for decades, finally get passed, but at the same time, we've seen some really intense controversies over spending. So let's get right into the numbers and the big decisions that have defined this wild ride. To really get what's going on, we have to rewind the clock a bit, back to October 30th, 2022. On that day, with 50.9% of the vote, Lula was elected president. But you know what? That number, it only tells you half the story. The real story, the one that truly sets the stage for everything that follows, is this number, 49.1%. That's what his opponent got. It was the tightest election in Brazil's entire history. And that result wasn't just a statistic, it was a perfect picture of a nation split right down the middle. And that brings us to the central question we're going to explore today. When a country is that divided, what does it mean for its economy? How do you possibly govern from an economic standpoint with such a razor-thin margin for error? So, with the country basically split in two, the new government had a really complex situation on its hands. To understand the moves they made, we first have to look at the economic rule book they inherited, and, more importantly, the specific rules they were dead set on changing from day one. And this gets us right to the heart of the first major battle. The rule in place was called the techo de gastos, the spending cap. Basically, it said the government couldn't increase spending by more than last year's inflation. For the new team, this wasn't financial discipline. It was a straitjacket that was choking off their ability to deliver on campaign promises, especially when it came to social programs. So what was their big idea to fix this? Well, it wasn't just a small tweak. It was a fundamental shift in the country's entire economic philosophy, a real game changer. This really shows you the difference. The new rule, the arcabouço fiscal, was designed to be much more flexible. It lets the government increase spending a certain percentage above the inflation rate each year. The whole point was to create breathing room in the budget for those social investments. It's a huge shift from a policy of just containment to a policy of actual expansion. All right, so now we're in 2023. This was the year of turning those big plans into action. But it was also the year those ambitious plans collided head-on with the cold, hard reality of the government's bank account. But even with the challenges, the government pulled off two huge wins in Congress. First, they got their new spending rule approved. And second, and this one is a really big deal, they passed the tax reform. I mean, think about this. This reform had been stuck in political purgatory for 30 years. Government after government tried and failed. The new administration basically used all its initial political capital to argue that this was a once-in-a-generation shot to finally modernize the economy. At its core, this reform is all about a value-added tax, or a VAT. The idea is frankly brilliant in theory. You take this ridiculously chaotic system with 5 different taxes, and you replace them with just 2. Simple, right? But there's a catch. This beautiful simplification could come with a hefty price tag. The estimated tax rate is sitting at around 28%, which could make it the highest in the entire world. So after all that, when the dust settled on 2023, what did the report card look like? Well, in a lot of ways, the numbers were surprisingly strong. GDP growth was solid, the stock market was up over 20%, and unemployment was dropping. All in all, a pretty good picture, wouldn't you say? Well, hiding behind those nice headlines was this number, and it was a giant flashing warning sign, a deficit of 230 billion reais. In other words, the government spent much, much more money than it brought in. That goal they had set for a zero deficit? Yeah, not even close. And this massive hole in the budget set a really worrying tone for the years ahead. Which, of course, brings us to 2024. This was the year the bill for all that spending really started to come due, bringing a whole new set of economic challenges and a ton of political friction. Honestly, if you want to understand 2024, you just have to look at what the dollar did. It started the year kind of calm, and then it just shot up, blowing past 6 reais and hitting a historic high. The ripple effects were everywhere. On top of that, you had this very public, very open conflict between the president and the head of the central bank. To try and get a handle on the soaring dollar and inflation, the central bank slammed on the brakes and jacked up interest rates, which is a move that slows down the whole economy. And that path leads us straight into 2025. With the government accounts still deep in the red, the defining story of the year became this frantic hunt for more money, more revenue, a hunt that turned out to be really controversial. The year kicked off with a bombshell proposal. The government wanted to start monitoring all transactions made through Pix, Brazil's super popular payment system, and credit cards. They said it was all about catching tax evaders, but the public reaction was awful. It just felt like too much government control, and the backlash was so fast and so fierce, they had to scrap the idea almost immediately. The pressure just kept building. In May, the opposition released this manifesto that just went viral. And one number really jumped out: 27. According to them, that's how many times the government had either created a new tax or increased an old one since taking office. That averages out to a new tax hike every 34 days. Now, whether that number was perfectly accurate or not, it didn't really matter. It completely dominated the political conversation for weeks. But this hunt for cash hit a major roadblock. The government tried to get rid of tax exemptions on some really popular investment products, and Congress just shut it down. It was a very clear signal that simply trying to raise taxes over and over again was not going to be an easy way out of this mess. So after these 3 years of incredible highs and challenging lows, what's the final snapshot of Brazil's economy today? Well, it's a really complex picture. It's full of those contradictions we talked about right at the start. Let's just look at the scorecard. On the one hand, unemployment is at historic lows, and the stock market is buzzing near its all-time high. Inflation seems to be mostly under control. That's the good news. But on the other hand, public debt is still extremely high, and that's a constant worry. And the currency, the real, is still weak, which makes everything imported more expensive and can push inflation back up. And all of this brings us to the real million-dollar question, doesn't it? How can an economy keep unemployment low and the stock market high at the exact same time the government's debt just keeps getting bigger and bigger? It is a very, very delicate balance. And the answer to that question is what will ultimately define the future of the Brazilian economy.